Do you feel like everyone's talking about stocks, bonds, and real estate? What about the investments the rich are making that nobody seems to mention? Are they missing something big? You can dip your toes into these waters too. So stay tuned because we're about to unlock some investment strategies that could change the way you build wealth. We dug deep into the portfolios of the ultra-wealthy and uncovered 5 secrets they use to grow and protect their fortunes. And guess what? We're discussing the top 1% of the top 1%. People like Elon Musk, Bill Gates, Ray Dalio, Jeff Bezos. These companies are in their early stages, looking for funding to expand and innovate. It's a game changer. Now remember when Amazon was just an online bookstore? Or when Google was a search engine in a garage? Some platforms allow you to invest with as little as $100. That means you can start building that diversified portfolio today. Imagine being able to invest in a company before it goes public. Now, we're not suggesting you go all out and buy a Van Gogh, but there's a lot more to art and collectibles than meets the eye. Let's break it down. By investing in art and collectibles, the wealthy reduce the risk in their portfolios. Unlike stocks or bonds, art and collectibles are generally not correlated to market fluctuations. So when the stock market is down, art prices may remain steady. Now, when we talk about infrastructure, we're talking about the backbone of our modern world. Bridges, highways, water treatment plants, ports, and data centers. Projects like toll roads and utilities often have contracts that guarantee revenue streams, making them less susceptible to economic downturns. Investing in infrastructure doesn't mean you have to become a civil engineer. The rich know that owning farmland is a timeless investment strategy. In fact, Bill Gates is now the biggest private landowner in the United States, with much of his real estate holdings in farmland. You can simply invest in infrastructure funds and benefit from their performance. Second, inflation hedging. The wealthy know that inflation can erode the value of their investments. Infrastructure funds, with their reliable cash flow, offer a hedge against inflation. Now, this is an investment strategy that many of you may not have heard of, but the rich swear by it. Life settlement investments have produced annualized net returns in the double digits. That's a big draw for wealthy investors looking for strong returns. Second, diversification. Adding life settlements to a portfolio can help diversify investments, reducing overall risk. And third, tax efficiency. Life settlement gains are typically taxed at more favorable capital gains rates rather than as income. Subscribe for more insights and drop a comment below with which of these investments interests you the most. Remember, investing is not about get-rich schemes. It's about making smart choices that align with your financial goals. And with the right information and action, you can pave your path to financial success. Thanks for watching. Until next time. Unlike oil or gas, farmland can keep producing crops year after year. The rich diversify their investments to protect and grow their wealth. They're not just hype. They're designed for long-term protection and preservation of wealth. As long as you have fertile soil and water, you can keep harvesting. Second, it's inflation resistant. The value of farmland tends to rise along with inflation, making it a great way to preserve your wealth. Third, passive income. Owning farmland can provide a steady stream of passive income. But remember, this is not an investment for the faint of heart. Life settlements typically involve institutional funds or accredited investors. You can lease your land to farmers who will pay you for the right to grow crops on it. And third, societal necessity. We rely on infrastructure every day, whether it's traveling on roads or using clean water. Now you can invest in farmland for as little as a few $100s. Since these services are essential, infrastructure investments can be resilient to changing economic conditions. These are all critical parts of our daily lives. And they're also fantastic investments. Yes, it sounds a bit strange, but it's a legitimate way to invest. Here's how it works. Say someone buys a life insurance policy, but later decides that they no longer need it or can't afford the premiums. They can sell a portion of their policy to an investor. That investor will then receive a payout when the insured person passes away. Second, inflation protection. Owning art and collectibles can be a great way to protect your wealth against inflation. One option is through exchange-traded funds like the iShares Global Infrastructure ETF. These funds allow you to buy and sell shares on the stock market, giving you exposure to a range of infrastructure projects. Rare pieces tend to appreciate in value alongside inflation, helping to preserve your purchasing power. Third, exclusivity and prestige. The rich love exclusivity, and art and collectibles often offer just that. Owning a rare piece can be a status symbol and a conversation starter, reflecting the owner's unique taste and sophistication. With private equity, you're essentially getting in on the ground floor, sharing in the success of a company that hasn't hit the mainstream yet. Second, the numbers speak for themselves. A recent study showed that venture capital investments in the U.S. alone reached nearly $330 billion in 2021. That is a record-breaking amount and a clear sign of confidence in this investment sector. Third, a hedge against inflation. The wealthy understand the importance of protecting their wealth, especially during times of inflation. Private equity and venture capital investments often offer a hedge against inflation since they tend to be associated with growing businesses and innovation. Investments in those days would have been life-changing. That's the potential of venture capital. Private equity and venture capital. Think of private equity as buying shares in a company directly. But here's the twist. Unlike public companies where you and I can easily buy and sell shares, in private equity, shares are not publicly traded. Think of it as a tangible asset that can appreciate in value over time. Then there are collectibles, things like vintage wines, classic cars, rare sneakers, stamps, or coins. The wealthy invest in these to diversify their portfolios and add unique items that can potentially increase in value. This means that buying and selling these shares is a bit more complex and usually reserved for the big players, institutional investors, and accredited investors. The good news is, technology has made it easier than ever. Platforms like Masterworks and Rally allow you to invest in rare artwork for a fraction of the cost. And you can own a piece of a Picasso without having to buy the entire painting. Now, take a second to imagine the kind of financial moves they're making. You're probably thinking sky-high stock investments, right? Well, that's only part of the picture. Let's start with a glimpse at who we're talking about. We're not your typical everyday investors. Their wealth isn't tied to a single company or asset. Instead, it's spread across a wide range of both public and private investments. These individuals have built empires, disrupted industries, and amassed billions. In our first category, let's talk about an investment strategy favored by the most sophisticated investors. Venture capital, on the other hand, is all about backing startups and high-growth businesses. This is where the real big bucks come in, but you're not left out. Platforms like Seed, Invest, Republic, and AngelList. Even individual investors like you and me can invest in startups. Now, let's unpack why private equity and venture capital are so appealing. First, exclusive access. The great thing is you don't need a ton of money to start investing in private equity and venture capital. Moving on, let's talk about art and collectibles. Art in particular, fine art has long been seen as a status symbol and a safe investment. But you're probably wondering, how do I invest in art or collectibles? So why do the rich love art and collectibles? First, diversification. So whether you're interested in art, wine, or classic cars, there are options for you to invest and enjoy your passions. Next up, let's discuss a favorite among institutions, infrastructure funds. But how do you invest in infrastructure? So why do the rich favor infrastructure funds? Well, first, stability. Infrastructure investments tend to provide stable, long-term cash flow. Now, here's the best. Let's turn our attention to a topic that many of us take for granted: farmland. Yes, farmland. But why farmland? Well, first, it's a renewable resource. Investing in farmland used to be a very hands-on process, but platforms like AcreTrader and FarmTogether have changed the game. Finally, let's dive into a topic that might sound a little controversial, but trust us, it's worth a discussion. Life settlements. Life settlements involve buying a portion of someone's life insurance policy from them. While it might sound dark, it's a multi-billion-dollar industry with serious potential for investors. So why do the rich invest in life settlements? First, high returns. There you have it. 5 ways the rich invest their money. From private equity and venture capital to art and collectibles, infrastructure funds, farmland, and even life settlements. Now, if you're wondering what all these investments have in common, they are all about low correlation with the stock market, often illiquidity, meaning they're not easily traded, and offer diversification that most average investors don't get. If you enjoyed this video, please give it a like.